What is going on, you beautiful humans? I know that it has been a minute since I posted on this channel, but I am back to help with some perspective and to share my own experience at building wealth, because that is what I want for all of you. And I want you all to have the opportunity to live your best life. And I do not mean that Instagram life, but this is about establishing the behavior of the top earners. And that's the focus of today, is setting up those behaviors so that they actually become a habit. Now, I know that there are some hard truths about those of you trying to make an actual move to purchase a house, that you're getting priced out, not only due to the home valuations that are occurring and of course those higher interest rates that are going along with them, but also the investors that seem to be showing up to the table either with cash or more favorable terms that are allowing them to continue to acquire that property. And I agree, that is a hot mess. But let's not even mention the declining savings rates in this country. We do actually have to mention it. And I can agree that inflation certainly hasn't been forgiving as we are all trying to save. And it's not only a gut feeling, but I think we also understand the reality that the wealth disparity is continuing to grow, and that gap is getting larger and larger. And it really feels like this system is kind of working against you. And there are many of you out there sharing that you're working multiple jobs and you're still unable to make those ends meet. And some of you have a suffocating amount of credit card debt. And there's really no judgment here, but I really think it's because you're here right now on this platform with the rest of us, and you're at least trying to gain some insight and get some advice on improving your station in life. And so that's actually a step forward. But it's also the actions that you take that will deliver some of those results that you are actually wanting. And I'm going to share some information that has served me well, but I had a very limited start when it comes to the information that I received growing up, and not to mention an extremely limited financial resource that it kind of felt like there was no way that I could even make an impactful change in my particular situation. But let's just say that I went from Spam and potted meat, and now we are actually dining on safe catch tuna these days. So I would actually say that we're doing pretty well. And seriously though, I know that there is information flying at you from all orifices of the internet, and all I know is that things changed for me when I started listening and modeling the behavior of those individuals where I actually wanted to be. And when it comes to your own wealth, you need to think strategically about your income. And I know that it's often mentioned, even by myself, but I understand that not everyone wants to start a business. I totally get it. That is totally fine. You don't have to start a business, but you could greatly benefit from adopting a business mindset, even as an employee. And if you have some lofty goals about where you'd like your salary to be, it's likely that you're going to pretty much hit that income ceiling, and you'll be limited by someone else's decisions. However, having that business mindset can help you achieve more, and this is what it looks like as an employee. It's really about thinking beyond just your job description. It's about seeing yourself as an asset to the company and constantly increasing your value. You're not just trading time for money, you're investing in your professional growth and treating your career like it is your own business. And this means taking initiative. Don't wait to be told what to do. Identify those problems and offer solutions, being proactive and really just making your company better. Now, developing in-demand skills, depending on the situation that you're in, maybe it's learning some new software, but take some courses. Whether your employer pays for it, definitely take advantage of that. Or it's something that you might be able to find for free or low cost out there, but become an expert in your field and anticipate future trends. The more valuable that your skill set is, the more valuable you are. Now, this is either said too much or too little, but networking strategically, building those relationships with people who can help you advance both inside and outside your company. Your network is literally your net worth. That's an entire video right there. I'm gonna make a mental note on that one and we'll talk about that later. But seeking performance-based opportunities is another way to really look for roles with bonuses, commissions, or profit sharing in your current company, or maybe outside of your company. But advocate for yourself and seek ways to directly tie your income to your results. And seeing yourself as a brand, that is a big one. Manage your reputation and build a portfolio of your accomplishments. What would really make someone want to hire you or even promote you in your current situation? Thinking long-term, we're not talking 3 to 6 months. We could be talking like a couple years here and maybe even longer, but don't just focus on the next paycheck, but the next promotion, the next career move also, and how each role contributes to your overall financial goals. Have a vision for your career trajectory. And adopting that mindset, you are essentially creating your own internal business within the company. You're making yourself indispensable and opening up opportunities for higher pay and faster career advancement. But really, more on that, just kind of positioning yourself for future opportunities, even if it's outside your current company. When you think like a business owner, you are constantly evaluating, am I being paid what I am worth? What is my upward mobility in this particular organization? And what other opportunities are out there that align with my long-term financial goals? It's really about keeping your head on a swivel, and I have said that before. This proactive approach allows you to scale your income and diversify your options even within the traditional employment structure. And speaking of income, let's actually talk about multiple streams, because I have to at least make a point that just relying on one income stream, even if it's a steady job, does carry risks. Diversification can include other jobs like side gigs. And here's the thing, I am not saying that you need to burn the midnight oil, sacrifice your own health to work harder. But sometimes those side projects may be a way for you to offer some consulting or freelance services, which can be the result of all that like investment that you were making back, earlier, as I was saying, like as an employee, because it may be an easier pivot or a sidestep because you're already doing the work. And this, of course, can be like short term, like it can be a short term endeavor that eventually gets you into building a portfolio of income streams that don't require much of your time, such as dividends. We can talk about capital gains later, and some like rental income. And like, again, we can talk about that in another video. But even if you're able to acquire some property, even like house hacks. So that's the thing, like if you are able to buy your first home and it's either you or maybe you and your spouse or partner, and you've got a couple extra bedrooms, you could actually rent some of those out and then help you pay down that mortgage. But we'll talk about that maybe in another video. Now, I probably should have started with this, and it's really something that I don't see eye to eye with Dave Ramsey on, but that's okay. We're not always aligned. But I'm speaking from my own experience that if you want to have one of the absolute easiest ways to unlock more financial opportunities, it is a good credit score. I am not kidding. It is like getting the answers to the test of a personal finance test, basically, something that is very complicated and nuanced throughout your life. And I know that it sounds boring, and it was really something that I messed up from the get as a young adult, and I didn't realize the many aspects of it that really started to impact my own financial life. And you've got to think about it. You want to buy a house, that mortgage with a killer interest rate, even if it's like through a builder and they're always like, oh, we'll get you in there, we'll get you in there. It's your credit score that is the first thing that the lender is going to look at. And you want to rent a decent apartment in a thriving neighborhood, landlords are checking your score. You need a car loan to get to that new job. Maybe it's a little bit longer of a commute. And so it is going to be the credit score again. It doesn't really stop. So there's even employers that will pull your credit report as part of the job application process, especially for the roles that involve handling money or sensitive information. It is like your financial reputation precedes you even before you walk in the door. And here's the kicker. A bad credit score doesn't just mean that you get denied, it means that you get penalized. Higher interest rates on loans, bigger security deposits, limited access to credit cards, and really any kind of like decent rewards, and sometimes even missed job opportunities. It is really like paying the I really messed up kind of tax, and you pay that for years to come. It can literally cost you tens of thousands of dollars over your lifetime. And I remember when I was trying to repair my own credit, and I ended up asking my credit union about a small loan or a credit card. And really what I only qualified for at the time was a secured credit card, which is where you deposit the money in the bank and it secures the credit limit of that card. Now, I happened to be waiting tables at the time, and I had a really good weekend where I made like $500, which back then was massive. And honestly, like that's a decent amount of money. But my bills were paid, so I decided to put it toward that secured credit card. And I would just make small purchases and then pay it off when I could. Like when I got that statement, depending on like when the statement closing date was, I paid it off immediately. And so really what it came down to is rinse and repeat, because it did take some time, but what it really did was establish a behavior that helped me continue to build on. And one of the things that I did for my oldest son, and now this is actually something that I'm doing for my other two boys, is that I added them to one of my credit cards. Now, I know that this can't be the situation for everyone. I totally get it, but I was in a position to give them a head start. My credit score is in the 800s. And when I first added my oldest son to one of those cards, his credit score like went basically from non-existent to almost the mid 700s. And of course, it doesn't translate score to score, but he jumped quite a bit. And over time, his credit score continued to incrementally grow and like increase. And he started to get those credit card offers, which I understand can be enticing. But I will say that just because he has that credit score, it didn't mean that he can just go out and get a mortgage because he doesn't have the income qualifications as a college student. But what it did do is help him get a favorable lease deal on an apartment, meaning he didn't have to pay any extra deposit above what would typically be required. And they even let him negotiate the lease so that he would only rent during the school year. Now, I know that some people think like credit scores are just something that keeps you borrowing and in debt. But there are ways to actually leverage certain debt for some good, especially if it frees up extra cash that you have that you can invest in something that will have a greater return than the interest that you're paying on that particular debt. It's really a system that you can use to your advantage, and do not let a bad score hold you back from opportunities. Please do not let this limit your potential. Instead, let's turn it into a tool, a lever, a way to open doors that you didn't even know existed. It's not about being perfect. It's about being responsible and demonstrating that you can handle credit wisely. And trust me, the rewards really are worth it. And I know that you're going to want to start investing as soon as you can, but here's the silent wealth killer. And we know that it is credit card debt. And I don't care how good the investments look. It is going to be pretty much next to impossible to beat those high interest rates. Compounding daily, eating away at your financial progress. You cannot build wealth with a mountain of credit card debt hanging over your head. It is literally like trying to run a race with very heavy ankle weights. So if you're serious about improving your credit score and building wealth, paying down credit card debt is a non-negotiable. You start by tackling the credit card with the highest interest rate first, and even small, consistent payments can make a huge difference over time. And as you pay that down, as you pay down that debt, you're not only just improving your credit score because your credit utilization actually gets better, but you're freeing up cash flow that you can then invest. And then you're turning that liability into an asset. Now, every dollar that you save on interest is a dollar you can put toward your investments. It is a dollar that can compound and grow into something much bigger. It's not just about getting out of debt. It is about building a launch pad for your financial future, because a clean credit report and a zero credit card debt, I mean, seriously, that is a windfall. That is when the financial game really does begin. And once you've tackled that debt, or even like while you're working on it, this isn't the time to like let up off the gas pedal. Oh no, we are hammering it, because as a side note, do not let that lifestyle creep start happening where you think it's time to upgrade your car or your lifestyle right away because you got all of this like extra income. We don't need to borrow from tomorrow to pay for today. The time to start thinking about your investing was yesterday. And of course, the next best time, as we often say, is today. So because building that wealth isn't just about saving money, it's about making your money work for you. And one of the most powerful tools that you have in your portfolio, aside from some emergency cash and a high yield savings account, yes, it is a Roth IRA. Now, if you're new to investing, a Roth IRA might sound intimidating, but trust me, it is not. It's really an incredibly simple and like incredibly powerful tool. So the breakdown is that it's a retirement account that allows you to invest after tax dollars. This doesn't, like you don't put in pre-tax dollars, so you don't get that tax deduction up front. But when you retire, your withdrawals are tax-free. So think about that. Years of compound growth, and that goes right to you. And here's why it's especially powerful for young people. That is time. That is the one asset that you have. The earlier you start, the more time your money has to grow. So understand that compound interest doesn't have to be all bad like with the credit cards, because in this situation, it is like magic, and a Roth IRA is a perfect place to let that magic happen. So I have started a Roth IRA for each of my kids, and they all have a part-time jobs. And they put a percentage of their paychecks into that account. And they're often asking me about the investments to make, trying to time the market, especially as volatile as it is like lately. But I just remind them to continue to dollar cost average, and that they have time on their side. You do not lose until you sell, and they should not be selling anytime soon. But in your case, let's just say that you happen to be like investing, you have access to $5,000 and you put that into a Roth IRA. And by chance, I don't know why, maybe you happened on this video, but you're the age of 25, and so you happen to be listening to me. Okay, so then assuming an average annual return of 7%, by the time that you are 65, you could really just have just under a million, if not slightly more, completely tax-free. And that is really the power of starting early. However, for those of you that are starting out a little later like I did, there are limits to how much you can invest in those accounts each year. So there's that 7,000 annually that you can invest as of this time, and then you can increase that up to another $1,000 if you are over the age of 50. But if you've been working on increasing your earning potential, like we were talking about before, paying down your debt, then you can at least max that out each year and use any of those extra funds that you may have to diversify for other investment vehicles. And opening a Roth IRA is incredibly easy. Most online brokerages offer them, and you can get started with just a few clicks. And there's really no excuse not to take advantage of this pretty much incredible opportunity. Okay, so let's get into the quick recap because we've covered a lot of ground. We started by acknowledging the financial challenges that many face. We talked about taking control, about shifting your mindset, and about building a solid foundation for your financial future. We dove into the power of a good credit score. Yes, I believe in it. And treating it like your path to wealth. We tackled the silent wealth killer too, because credit card debt is a no joke. And I just wanted to emphasize that paying it down isn't just about getting out of the red. It really is about freeing up your financial potential. And then of course we talked about investing, specifically the incredible opportunity of a Roth IRA. And remember, it is not just about saving. It is about growing your money to work for you. And the earlier you start, the more powerful that growth becomes. But here's the thing. Knowledge is only powerful if you take action. You can watch 100 videos, including mine, and read 1,000 books, but if you don't implement what you learn, then nothing is really going to change. So I want to challenge you today. Check your credit score, see where you stand. You can grab your credit report at annualcreditreport.com, or you don't even have to sign up for one of those monthly fee services, but I can also link up some other free options out there because there are some companies that are providing those free resources, but do not feel pressured to have to pay for them. Make a plan to tackle your credit card debt. Even the small steps will add up. Open that Roth IRA, start investing in your future. And these aren't just suggestions, just random. They are about building the blocks of that financial freedom. And you have the power to build that freedom for yourself. And I would really love to hear from you and let me know what you are going to do today to start building your wealth. As always, I appreciate your time here and I am excited to see what you accomplish. And remember, your financial future is in your hands. Now you go out there and you start to build it. And I will catch you right back here on the next one.